Hello, in this presentation we will record the payment for inventory within QuickBooks Pro 2018, the scenario being that we have issued a purchase order, we're receiving the inventory and Hello, in this presentation we will record the payment for inventory within QuickBooks Pro 2018, the scenario being that we had a purchase order, we purchased inventory, sent a purchase order, and now are making a payment for the inventory that has then been received. If you've been working with us, we will be continuing on the problem of Get Great Guitars. If you have not been working with us, that's okay. We are going to be working here in terms of writing a check for inventory that has been ordered and received, has been ordered with a purchase order, and now we are receiving the inventory and making a payment for the inventory at this point in time. If you have a backup file and would like to restore that backup file to this point in time for this particular problem to put us all in the same point, then you can go to the file and open or restore company. It is useful to do that so that we have the data. We will be entering data as we go. We've entered data in the past. We will continue to do so. If you don't have that information, that's okay. You can kind of follow along here, but if you have that information and you, even if you made an error in the past or something like that and want to be in this exact location, you can use that backup if you have that available. The scenario here being that we had a purchase order. We're first going to write a check to Epiphone. That's one of the people that we buy guitars from, so we're buying and selling guitars here. And we had a purchase order. If we click here on the purchase order, we can scroll back to the prior purchase orders. These are the purchase orders open. We had one from Gibson. We've got one to Epiphone here. This is the item that we're going to pay out. Now, we could do this a couple different ways. If we had a large purchase order and we were going to receive the purchase order, typically this is a request, remember, when we make the purchase order. And that's basically saying, hey, we would like to purchase something. Unlike if we purchase something from Amazon, the purchase order typically happens before payment happens. So we're making a purchase order before we've even made a payment on it, no transaction happening at that point in time. Then in the future, we're going to receive the inventory. So we could go down this track here and say, we have now received inventory. And if we select, I'm going to close that back out. And note, of course, we are on the Home tab. And to get to the Home tab, you go to Company, Home. And if you want to see the open windows, you want to go to View, Open Windows List. That's where we're going to be working on these open windows as we move forward. The Home tab gets a great little pictorial format of what we are doing through the process. So a typical purchase order inventory process would be that we make the purchase order. We're going to receive the inventory. If we select the drop down, trying to get the drop down, it's going to say receive inventory with a bill. And that will often be the case. We'll have the inventory with a bill or receive inventory without the bill. Then we can select that, and then we can have enter bill against the inventory, and then we have the pay bill, which would finally mean we're actually going to write the check. Now this is going to be a great process, especially if we have to count the inventory. So if we ordered a lot of guitars and we're trying to get the guitars and count them and see if they are all there, we'd want to do this. Or if we had coffee cups or something like that, we'd want to make sure that that's the case. If we want to get right to the writing of the checks and tie basically the purchase order to the check writing, we could go directly to the writing of the check. And note what will happen is what's gonna happen is it's gonna tie out the check once we put the vendor in there to the relevant purchase order that we have out there. So what we're gonna do is we're gonna write a check. That check is gonna be to Epiphone for a guitar that we had purchased we ordered. We had not yet purchased it, using a purchase order. And as we do that, the system's going to ask us, do you want us to link this guitar, this payment that you're making for this guitar to the purchase order? And we're going to say yes. And that will then populate the information for us. So we're basically linking the purchase order to the payment. We only bought basically one guitar, so it's going to be a pretty quick way to record this information for a business such as this, a small business purchasing the guitar. So we're going to say, write a check. We're just going to write the check rather than going to the check register. In order to write this, we're going to write it directly here. Whether we are actually have a manual check or whether we are printing this within QuickBooks, we're going to go into the write checks feature. We're just going to tab through this. It's going to the checking account. That's probably our only account, or in our case, it's our only account, but it should default to the main checking account. The check number should also default, so that should match the check numbers, whether that be in an external checkbook that we are writing or within the printed checks or the external checks that we will be using to print these out. If we're using QuickBooks to print our checks, note that QuickBooks will not just print the check from scratch on a blank piece of paper. You will have pre-printed checks. The main reason for that is the fact that this check number then should match the number on the pre-printed checks, and that's going to be an internal control that's really, really valuable. So it's basically forced on any software that you have to have that that internal control there, so you're not just kind of printing the check. So that's what we're going to have. We're going to say tab, and I'm going to increase this to January 25th. I'm going to do that, and notice we're always working in 2021. We're going to do that. I'm just going to do that with the plus button. So we're on the 17th, 18, 19, 20, 21, 2, 3, 4, 5. And there we have that. Main thing, the main new thing is the Epiphone. That's who we are buying the guitar from. So we got the bill, we're going to pay for it now. So if we select the drop down, we could find it there. If we type it in there, we start typing, it will then auto-populate, and then that's the one we want. So if you just find it, if it's already selected, then we can select tab, Epiphone, and we can select tab, and then this will pop up. Open purchase orders exist for this vendor. Do you want to receive against one or more of these orders? And we're going to say, of course, yes here. Now, if this does not pop up, then it means that you probably don't have an open purchase order, and if you thought you did, then you probably want to go back and take a look and see what happened. If we're purchasing this directly, say, from our vendor, such as like if we were purchasing from Amazon or something like that, then we may not have a purchase order, because in that type of situation, we would probably be making the payment before we receive the inventory. But if we're in the case where we're receiving the inventory before payment, a case typical to many merchandising companies, then we're going to have a purchase order, and then we could tie out the check and or go through the billing process and the check to the purchase order. So we're going to say yes. Once this pops up, we're going to say yes, and it's going to say this is the one here. This is the purchase order 1001, which is outstanding for this Epiphone. Is that the one you want? We're going to check it. We're going to say that is the one we want and say OK. And there we have that. It then populates everything related to it. Let's go through and see what it populated. If we were purchasing this by check without this populated items, we'd have to know some of these distinctions. One, obviously it's going to populate how much it costs. It already knows that because we made that through the item list. So remember that we have an item list over here. If we go to list and we go to item list, we had set up this particular Epiphone. This item list here was set up for the Epiphone that we purchased, and I'm not sure which one we purchased, so let's go back to home. I'm going to double click on the purchase order and scroll back. So there's the one. It's an ELP Epiphone 400. That information right there was generated from the item list that we created, and it's the ELP. Note it says 500. That's the price, not the cost that we're buying it for. If we want to know where that data came from, we have to go to items and then edit, and we see that the cost was 400. That's how much we're purchasing it for. So we already have that in the system. When we ordered it, we already said in the purchase order, hey, this is, what we believe the order price will be. It should match up. So we're going to close that out. That's one of our internal controls as well, that the price that we believe it should be matches up. I'm going to close the purchase order. The only two items I have open now are the home and the write checks. Going to go back to write checks. So there's the 400. Then it's going to have the address or the person we're paying. Hopefully it would have the address if we had the address for the vendor. It's not required in order to write the check clearly. And then we're going to have down here a memo if we wanted to put the memo. I'm not going to put a memo. We probably should, but I'm not going to put a memo. And then we have the item. This is the important piece. This is where we really need to understand what's going on here. Whether we purchase this item from a purchase order as we did here, tying it together, or whether we're purchasing it directly with a check, possibly paying for it before we get it if we're a small business. We do need to note that the items is different than the expenses. There's these two tabs. It defaulted to the items tab when we selected the item. But what's the difference between this tab and the expense tab? This often will be the default. So when we write checks, it'll often default here, or it will default to the last place we were at, which is usually an expense tab. Normally when we write a check, it's an expense. We pay the bills at the end of the time period, utility bill, possibly wages expense. We pay, the rent bill. Those are all types of expenses. So typically the default will be to an expense. There's typically more expenses than any other account. Typically when we write a check, we're writing it to an expense. But in this case, we're writing it to purchase an asset, that asset being inventory. Inventory is being driven by these lists over here and these items. And so we call these item lists here items. So we're buying an inventory item. And that is why we have to put it over here into items. So when you see items, they could have called it inventory items. Might have been a little bit easier for us to know. But they just called it items. We need to know that that means inventory items. And that'll give us the detail down here. Also notes that everything else is recorded as an expense. You might think of some other things that you might purchase that are not expenses, meaning we might have bought furniture and fixture here, which would mean that we would record the assets up here of furniture and fixture. But that's still here. That's still in the expense tab. So this name is not as specific as it could be. What it's really saying here is this is all the items, basically inventory items, and expenses covers everything else. Typically those are expenses, but we could have purchased other things with this other assets such as property, plant, and equipment or supplies. So in this case, note that we are on the expenses, which will be there automatically if we tie it out to the purchase order. And it gives us that information drawing directly from the purchase order. It gives us the item, the description, the quantity directly from the purchase order, the cost from the purchase order. And note we have a customer here too. That customer that we had from the purchase order being Eric Music. That's who we bought this guitar for. We bought it from Epiphone thinking that it's going to go to Eric. Eric probably already having told us that that's the particular item they want. So he came to us, said this is what we want. We went then ordered it from our vendor for that particular client. And then here's the purchase order number. Once we have this information, we have the option then of either printing the check or not printing the check. We unchecked the printing check option, so we're not going to print it. We could print it here or we can print it here. Note that if you do print the checks from QuickBooks, then you will need those pre-printed checks. So you'd have to order the pre-printed checks that would have to have your banking information on it and that pre-printed number on it. And then you'd put those into the printer and print it out. If, on the other hand, you're just using QuickBooks to track the fact that the payment has been made, and you're putting this information basically into the register to track that information and then to reconcile the bank account, you'd still need this information. That's how we're going to do it here because we're not printing out the checks. So we're going to uncheck the print later option, and that's what we will have then here. Going to go ahead and say save and close. Now let's go through and see what happened. Couple things. We could check this out a couple different ways. We know that this purchase order one of the purchase orders have been received now. So we could click on the purchase order and then go back to that purchase order and say, there's the one, the payment is received. So we actually, by writing the check and connecting them, are connecting the purchase order now showing that that purchase order has been received. And remember that this purchase order has no journal entry involved. But it is nice to track, obviously, the purchase order having been received or not. So then we're going to close this out. Then the other thing that's going to happen is going to be on the financial statements. We wrote a check. So we think that the checking account should then go down for the amount of check we wrote. And we should have gotten the inventory for the inventory that has yet then been received. Let's see if that's the case. Going to our reports. Scrolling down to company and financial. Both of those are assets. All assets are on the balance sheet. So we'll look at the balance sheet standard. Changing the date to the date that this current problem will be worked in, 12/31/21. Then we're going to change the date range so that when we drill down or zoom in, it will then have the date range, basically a transaction report or basically a general ledger. 01/01/21, date range beginning January 1st, 2021 to 12/31/21, and OK. Then we're going to double click on the cash. We would assume that the cash is going to go down. If we do that, we see it does. There's the 400 right there that we're being paid. We see the check is the thing that's happening here, the form, and the date, and then the check number, the vendor's name, and the split account. Where else is it going? Inventory asset. That is what we would expect. If we double click on that, zooming in, we see that we then have our check. So that looks appropriate. So we're going to close that. Close that. We're going to then go to the inventory account. Here's the inventory account and see if that has increased by the inventory we have purchased. Click in here. We see that the check here has been entered for the Epiphone checking account. We have the 400, and so there is that item there. So that has increased. If we double click on it, there's the check. Exiting out of that, closing that out. We also note that this should affect our inventory reports. So if we were to go to reports up top, and we were to go to our inventory and take a look at the valuation, how about the inventory valuation detail, inventory stock by item, or inventory stock by vendor? Let's look at the inventory valuation detail. And we're going to change the dates from 01/01/21 to 12/31/21. And then we can see that we just purchased an Epiphone. I believe it was this 400 right here, the Epiphone music. And that item on the 25th, there's our check number. So there's the detail of the activity. Double clicking on it, there's our check again. So once again, we can kind of find what's happened. It's useful to go back and forth to the forms and see what's happening when we do these items, when we record these items. Back to the home tab here. Next, we're going to do the same thing. We're going to do this for another. We received a guitar, and we're going to make the payment for that. And so if we take a look at the purchase order, we are going to link up, checking on or clicking on purchase order. Going back, we see it's going to be this item here, the Gibson. We're going to say we received that, and we're going to write the check for that, and we're going to tie that together in basically the fastest way we can, which is basically just writing the check for the inventory, and then it's going to basically check off or tie out to the purchase order. So once again, you could do that through the process, and we could also do that by going to receive inventory with the bill, and then basically put in the vendor, which was Gibson, and go through this process. It's going to say that there's certain open orders here, and we'd say yes, and then click on that order and do this same process through this format. And then of course I'm going to say no, don't do that. We're not going to do this, by the way. Don't do this. And say no, and that would enter the bill, and then we would basically pay off the bill, writing a check at that point. That's a great way to do it. You can go through the process here. We're going to basically bypass that by just writing the check here, and that's going to tie directly to the purchase order and record the inventory all at that one point. So we're going to go ahead and do that. We're going to say write check, and we're going to say it's going to be going from the checking account, and the check number should populate automatically. The check date, January 25th, 2021. We will be working in 2021. We will keep that date. We're going to type in Gibson, and again, we could find that, of course, by clicking here and finding who we paid. But we're going to type in Gibson and populate, and then select tab. It's going to say, once we select tab, open purchase orders exist for this vendor. Do you want it to receive against one or more of these orders? Yes, we do. And so we're going to say yes. It's going to populate the purchase order, and we believe that's the one, so we're going to check on that and say OK. Once we do that, then it populates the amount based on the purchase order that we had generated. That should match how much is owed from the bill. If it doesn't, then we're going to have to check that out and see what happened. Then we're going to go down, and we could have the memo. We're going to say we have an item, once again populated for us by the fact that we tied out the purchase order. It should tie out to what we have then received. Note that once again, we're not on the expenses tab. We're receiving an item. That item basically meaning it's an inventory item those items being generated from the items lists here, and it would have been generated and has been generated, and we had generated it in a prior presentation before we made the purchase order. And that's going to populate then this information in accordance with the purchase order, which should tie out to what we have received. And if it does, then we're going to say that that is okay and save and close this. Once again, if we were to go to the purchase order then this way, we can just click on the purchase order and just go back. We would see that we had received in full, so that's good. That seems like it tied out. And we close this, and then we're going to go to the reports once again, the balance sheet. We're going to believe that we wrote a check, so the check here should have been written. So if we double click on that, the check has been written, there it is. If we double click on that, there's our check. If we close that out, close this out, go back to the inventory asset. If we double click on the inventory asset, we see this last piece here once again. Double clicking on that, asset inventory is going up by this check that we wrote for the inventory asset. Closing this. So there are those two items. Once again, if we went to the inventory report, I won't go back there again, but we could go to the inventory report and see it's there. Note also, it's often useful to check the checking account with our register. A lot of people are used to seeing the register. So if we were to go to the banking and then register, the default will be our checking account. If we open that, then we should see this check then that we wrote here. Remember, in prior presentations, we wrote some checks and some deposits within this form, within the check register. It's possible to do that, but in order to connect it up to the purchase order, typically you'd want to write the check or enter the bill and then use the check writing from the home tab to make sure that you're tying the thing out. If you're using something to write a check just to enter the data within the check register, a check that's already been written, and you just want to enter the data pretty quickly, then the check register could be a good way to do that. If you're trying to tie the information out or print all the checks, then oftentimes using the billing process or the entering checks is a useful tool to have. But in any case, we can see this information here. We can see the payments happening. If we want to see the actual check, the form of the check, you click on this item, and that will take you to the form that QuickBooks generates, whether we do it in the register or not, whenever we write a check or decrease basically the checking account balance. So we're going to close that out, and that's going to be it.